usually I do pre-scene because the whole idea is, although pre-scene is released a month ahead, there is no point of wasting a lot of time on the pre-scene. Usually I do pre-scene lecture within about a week, so this time maybe a slight delay, but well ahead. So I am sure the question I asked when this session was announced, pre-scene was released about a week ago. What have you done already? What is the message it gives you? Because usually it targets about 50 marks. So therefore, during this 1 hour plus session, our intention is to actually go to the essence of the pre-scene and see what are the examinable points, and then how you really align your current studies to face those questions, right? So at the same time you can ask any questions, and then when I do another session, actually it is to get ready to answer, how to write answers to these different types of questions. As you know, this is one before the last examination, before the new syllabus comes in. So therefore it's very important for you to complete your studies at this point. So without further ado, let's straight away get into the subject. So I'm actually, when you look at this slide, I'm comparing your pre-scene versus another companies, right? And all of you know now what your pre-scene is about, right? And empowering digital change. And this is empowering and enriching Sri Lankans' lives and enterprises. That's dialogue. And then the case study talks about, the most outstanding CEO to Asian Mobile. So that was Dr. Hans many years ago. So there is a lot of similarity, but the point is there are a lot of things that you can actually, when you do this research about telecommunication industry, if you look at in chartered history, very rarely tested in the past examination, right? It is a specialized industry. Having said that, very easily there are quick research from risk, especially risk of misstatement point of view, accounting standard point of view, you can look at. And this lecture is essentially geared to that. In terms of corporate governance, risk of misstatement, even from accounting standards, what are the areas that need to be prioritized to get above 50? So with that, and also there is, I have done just 2 slides to summarize the entire case and then deep dive into some of the things. So one thing in general, students, you can also come and compare to any past pre-scene, what is specific in this pre-scene. Can I get some comment? Use the chat. So one common thing that I noted is this is very general pre-scene, and examiner is, other than few things, everything looks everything okay. Obviously they have given few options, but in a case study like that you could expect any type of questions. There is much room to ask, it's open-ended, right? Once when that is the scenario, still going by syllabus, you can really target some areas, right? So what are those areas? That's what we are going to discuss. So before I do that, I want to remind you this message, right? Secret of exam success. If I ask you, right, any subject, what is that? So the secret of exam success is nothing but, so I'm very confidently talking to you over 2 decades of lecturing experience and having personally known several students who were prize winners, highly successful. What is the secret if you want to pass the exam or to get a prize, right? You should be able to think like an examiner. So the next question is, how do you think like examiner, right? How do you think? What is the basis? The basis says, even when you get the pre-scene, you have to really navigate and see what are the laws that this pre-scene connects. So the examiner, before setting the paper, essentially has to go through the LOs and connect those scenarios in the pre-scene, right? Even when it comes to unseen, what LOs I am going to test this year. And then obviously, once you know that, how to write answers. So have you done, for example, I will ask you, have you done any of the answers so far? Have you written answers by yourself, or you are reading answers? If you haven't done anything, you are at risk because you are just trying to write something at the exam. The chances of failure is very high. So be very confident to write your own answers. So obviously I am going to issue a paper before your exam, right? Few model questions, and then how do you develop your own answers. So I want to refresh before I get into the pre-scene. Another thing you should note, there is an exam life cycle, right? 5 years. Usually within that 5 years, examiner may target to test all the LOs. So which means any untested LOs, there is a chance of being tested. That's another thing you must know in your exam and the last examination. From that perspective, if I just looked at and show you some of the LOs which have not been recently tested, right, even from corporate governance. And then I will also ask, by looking at this pre-scene, from risk of misstatement, you can easily target 40 to 50%. About 40% for sure you can target, 40 plus with ethics question. So in a challenge in 3 hours while doing the consolidation, working on sums and things like that, this 40% definitely helps you to get a very good score. Even a prize winner or above 50 is nothing, right? Don't just get settled to get 50, right? Then the chances of getting lower than 50 is very high. So then you might see examiner can combine with the pre-scene, internal control type questions, audit committee or risk committee type questions, right? Sustainability type questions. Again, sustainability goes with corporate governance. As you know here, corporate governance and NFR and recent syllabus change. The NFR include IFRS S1 and S2 as well. And obviously Dialogue has early adopted S1 and S2. You can see how those, even in the latest report, how they have adopted to a great extent, combine various stakeholder frameworks like GRI, integrate. This is the first integrated report. Now all of those learnings I'm covering in this presentation, right? So with this 50 marks question, you may get questions from corporate governance, internal control, audit committee, risk committee, right? And then the other one is risk of misstatement. So there is a very important hint examiner has given in this pre-scene, and how do you deep dive that information and prepare for some examinable questions, and then how to write answers to those. That's very, very important part that we will discuss in this discussion. And then now some of these, for example, examiner may want to test some questions from this and internal control. Now this is one possibility as a part of 50 marks. Then corporate governance may go as a separate questions for 15 marks. Likewise, so there can be any such question, but our intention is actually to practice all of these areas for the pre-scene so that whatever comes you are able to answer, right? So now one thing I wanted to tell you, out of these LOs, what are the LOs that have not been tested very much? If you look at from corporate governance perspective, some of the theoretical question, right? So what is the concept of corporate governance from different perspective? What does it mean from operational perspective, finance perspective, social perspective? So if you haven't gone through this, you have to go through. There is a chance, as I told you, some of the LOs not yet tested can be tested, right? And then functions of the board. Are you very thorough with, in this case study, where the board has done, there are 4 board functions. The strategy function, right? Strategy and monitoring, right? And then accountability. So those 4 functions, how well they are doing, strategy, policy. So these you have to have very good practical knowledge, right? Otherwise you haven't really learned practical corporate governance. So these have not been very much tested in the past. Of course, board of directors have been tested most of the questions, but this one is an important area, right? And then the trends in corporate governance. Even here, the listing rules have recently changed. So what are the implications of those questions can, right? Then obviously audit committee has been a very famous question in most of the past papers that have been tested for many times, right? And this question evaluate the function of the board committee in ensuring the integrity of financial reporting, right? A possible area, again this has been tested. And another hot topic is non-financial reporting. Last paper also, S1 and S2, basic questions were tested. and this can come with integrated reporting, right? That's another area that you should focus on. Now, having said that, I just wanted to show that, pass that message to you. Now let us navigate the entire case study in just 2 slides, because I am not here to waste your time by opening the pre-scene, reading by para, because for me, as well as you, every minute counts. Now this evening to join this lecture, despite your, a lot of other commitments, all of you have joined, right? So I want to make sure that every minute counts, and it tells you that what you count now add as marks to your examination, provided after this lecture if you do something. If you don't do anything, this is just a lecture. That's not the way to do, right? So then I am not reading the case study, but I am really narrowing down certain issues that you can prepare for the exam. So let us look at that 2 pages now, 2 slides, the entire case, and then navigate. So now, if you look at page 1 to 3, what you can get is essentially this history, right? Historical evolution of this company from 2000, right? And then how they acquired fixed telecommunication provider. If you look at benchmark with Dialog, that's Suntel, right? How they acquired, and very recently the amalgamation with Airtel. So that's very much similar to, this case study evolution. And then like parent company in Dialog, they have 2, but if you look at Dialog, there are so many businesses they are in. This case study, there is somewhere it says they are going into unrelated diversification, right? Especially focusing on education sector. There are 2 aspects given, but this page 1 to 3, just the history, right? Then I will put, page by page. Page 4, this para is very important. Did you notice, right? Why it is important? This is the hint that it connects to IFRS sustainability standard, because it says under the heading of focus on sustainability, you can go to page 5, climate change, and one is a climate change, right? So this is climate change. Secondly, community impact, that is social, right? This is environmental, ES, right? People and the future of work, and sustainable value creation are the 4 pillars of sustainability. So this is 1, climate change, and the community focus, right? That is when we say community stakeholder, the people, and then they are also thinking future work. Those are the pillars. And then in addition, they say their sustainability strategy aims to what is called create shared value. That's a very important concept. Shared value means what? That's a triple bottom line principle. While they are earning, while they are growing their profit top line, they are also growing the benefit to the society, environment, and people. They are going to reduce their carbon footprint, scope 1, 2, 3 emission, right? So that is shared value, has a big meaning, right? Shared value means that. So you have to notice that. So this, how this connects to the exam, that is where the non-financial reporting could be tested. Some questions, what question we know, because we can go through the LOs and see what are those questions, right? So this is an important para. And then obviously when you look at KPIs of this company, all the KPIs looks good. Of course, there are some that requires attention. And then they have also given a financial review with numbers, right? So that is, then if I go to page number 5 to 7, as I do this case study, I want you to draw attention to those, because this is the essence you can get from the case study, right? And I'll go to definitely critical areas where I will discuss in more detail, right? So business strategy part, page 5 to 7. In page 5, they say now they want to get into unrelated industries, right? And then those specifically, right, under 10 also they discuss. One is they are going to acquire 90% of, this is a history again, right, because what they say, what happened in 2017, right, how they acquired 90% of this, payphone through a special, this is share purchase agreement, and then how they acquired satellite television company. So essentially, if you look at their history, as I spoke, Suntel, how Suntel was acquired through the share purchase agreement, right? And then recently also in the case study, if you look at actually even dialogue, this Airtel amalgamation, right? And then how they acquired MTN television, all of those, I mean, they talked about past. And then from consolidation perspective, they emphasize that how, for example, if you read point 11, that how they fair value non-controlling interest, so those aspects are brought in. And then these two are important from a future, I mean, case study perspective. If examiner wants to give you, risk business plans, they have page number 8 and 9. Two plans are discussed. One is to acquire well-established higher education establishment, right? And those can come as accounting question, maybe acquisition. And from a risk perspective also, you can see what are the risks that acquisition is going to pose, and some of those risks are given, especially when the second initiative is to launch a private campus with Maldives, with a partnership with Maldives bank. So there are obvious risk is exchange rate risk and tax issues, intercompany transaction, exchange control regulation. So this is a important area for example, from a audit committee or risk committee perspective, how to kind of do a due diligence and look at how this currency risk is going to impact and what are the other associated risks. So that's a focus area that you can look at. And then obviously from finance management tax perspective, which I don't want to go into detail, and your respective lecturers will talk about it, and that also they have given how they have finance and how they are intending to finance and tax matters, right? Then this is a very important area as far as my area is concerned, and holistically even the case study page 10 to 11 talks about risk management, and they specifically talk about audit and risk committee. When you say that there are two committees and that has financial experts, 5 additional members, even if you look at dialogue, overall these committees, many independent directors, all of that. So the way this is mentioned is that these committees are good and probably they have relevant expert members. Then what is the issue? The issue is actually they can ask questions as to how these committees should look into specific issues, so scenarios, which I am going to discuss with you, right? But this is about the existence of these committees and then how internal auditors and external auditors connect to these committees, right? So this is generally about finance risks, where they exposed to foreign exchange, interest rate, market liquidity and credit risk. And then they say substantial amount of purchases and liabilities of foreign operations are denominated in foreign currency as opposed to, which means one of the risk is exchange risk. For that they have given in 17 that how they hedge through forex, right? Forward contracts, currency options, currency swaps and other derivatives. So if you look at, if examiner asks you to talk about risk of misstatement, obviously one risk is foreign exchange risk. So what is the risk? For example, if they are going to do hedging, right? Hedge accounting principle, you cannot do just hedge accounting. There has to be risk management. Please make notes. These are specific areas. So why don't you read hedge accounting, right? If they bring an issue about hedge accounting based on SLFRS, what are the prerequisites for hedge accounting? Having risk management policies aligned, documented risk management on hedging, and then what is your risk that you are going to hedge in, what is the hedge instrument, and then how do they measure hedge effectiveness and whether this is properly accounted for, right? So that's the important area that you need to focus in terms of hedging, even for risk of misstatement. So this part is relevant to risk of misstatement as well. And then corporate governance section from page 11 to 12, This is very effective, right? Normally we say board should meet, these committees should meet, board should meet at least quarterly. Here, every month they meet and discuss what are the important areas under these headings, right? It's not just numbers. This is a good thing, right? In some of the exam papers, they have asked, in past papers, if you look at one of the recent paper, not only to highlight weaknesses, what are the good things they are doing. So you should notice that this board is going beyond financial numbers, which is aligned to our corporate governance code. They look at, in addition to numbers, the risk, right? And they are looking the talent and other areas like culture of the organization and stakeholder matter, that is sustainability also being looked at, stakeholder interest. And this is the most critical one that I see in the case study as far as risk of right? 3 years brick mark. That's very, very important. That tells you the message that this connects to internal controls, risk management, as well as from there to financial statements, right? And when I say risk management from exam perspective, how are you going to identify risk of misstatement statement, how are you going to comment about internal control, and how are you going to comment about the roles and responsibilities in terms of reviewing these controls, right? How do you apply CASriLanka framework, for example? That's a very important area. Why these key audit matters are given to you, right? So can you write in the chat, in a telco company, what is one of the top issue? So I can confidently discuss with you, having audited, when I was audit trainee, I got opportunity to audit telco companies, right? We were so interested to study their processes in depth. And today also when we have chats, those issues are prominent challenges, right? So any guess what are the top? Now if you look at, so I can see, so one student has said revenue recognition, but that is written in general word, right? If I ask you what is the risk in revenue recognition, what is the answer you will give? Now this is very important, risk thinking. Remember, in your syllabus was changed about 2 years or 3 years ago to bring CFO perspective to risk. What CFO worries about financial statement in telco revenue recognition? One is a drop of users. Any other specific answers? So remember, this revenue leakage is one of the biggest risks, and how that happens we will discuss, right? So I'm going to explain this beyond the case study to go into little detail, right? So obviously examiner has given you this complexity, it's given in the case study, but how do you go little deeper into the issues of internal control, the risk, and what are the controls and how it eventually affect the financial statement, right? So some students have said revenue recognition period, complexity, right? Remember, in the exam when you write an answer, you have to really know what to write. What am I going to write in my first sentence, second sentence, bulletin, right? So why the CAM, key audit matter? Remember, in auditing from auditing perspective, as a CFO you must know, if audit is highlighting something as CAM, for your notice, for your knowledge, please make a note. So CAM is a significant risk, right? Or area that requires significant judgment, or it is something that happens, some event, significant event that happens during the year. This is a scam, right? So significant risk is a risk that is going to affect your financial statement, or is it an area that requires judgment? So in this case, it is a significant risk. Why? Even in the examination, right? So I drew attention to the key audit matters, right? And I explained to you logically from a CFO's perspective, a CFO should know key audit matters arises either from a significant risk and a significant judgment. Then if you ask what is a significant risk, right? So that is an area that involves higher inherent risk, right? Then if you ask, what is a higher inherent risk, that is essentially due to one of the reasons examiner has mentioned, the complexity. What do you mean by complexity here? I will explain to you in another slide using the industry knowledge. This is where the complexity, and this is what the risk and how that is going to affect numbers, and that is the focus of our subject. And our subject is risk of misstatement, right? Risk from CFO's perspective. So if you look at three reasons given by examiner, one is complexity primarily arising from billing, and these words are very important, large volume of data, right? So see how many phone calls taken in a minute, and how those are captured through the switch, and how they are channeled through the CDR to the billing system, and based on the particular package how that rate is applied, and then how that billing information is transferred to ERP, and that process I'll show you in another slide how does it work, right? I'll come to that. So I'm explaining this in detail. Remember here, up to now I'm showing what is critical in the case study to note, right? And then they are also saying that different revenue recognition based on the 5-step process, the performance obligations, sometimes the bundling versus unbundling of revenue and how it could affect. So those also we will discuss. Right, so that's this area of page number 11 to 12 is critical, right, from a risk perspective, even the risk management section that I will deep dive, and then digital transformation. And they say another thing they emphasize in point number 19 also, massive amount of customer data. Please make a note, data privacy law in Sri Lanka is kicking, and then whether there are readiness against this, and what are the possible risks even from a CFO's perspective if you are not compliant, what actions, the penalties, the reputational risk, those are important areas. Especially here the data privacy, right, is a hot topic because it's a law in Sri Lanka now, and whether that has been incorporated into their processes, right, that we need to see. Right. Then now, before I get into the issue, specific issue, now that's all. Here I have 2 slides to show you. Out of these 2 slides, if you ask me what are the critical areas from a risk perspective, where the page number 4 talks about sustainability, and then page number 12 talks about specific business plan, and obviously numbers are important, right? And then these areas are going to be very, very important. Right, and now from FM and tax perspective, obviously those are important, you must go through, right? Now, I want to tell you that even Dialogue, then they present this report, they talk about the first integrated annual report, and even IFRS sustainability is incorporated. So one thing very important for you to understand, right now, for example, if examiner wants to test some of the past papers, they have even tested the multi-capital model, right? What is your understanding about multi-capital model? The multi-capital model that refers to the 6 capital, right? How it's going to create. Now 6 capital model is going to what? Transform through business activities, the input to the output, and those outcome is going to create, outcome impacting same 6 capital. So from beginning of the year to the end of the year, how each capital stock is going to increase. At the start of the year, they had X amount of shareholders funds, how this is ending. That is how through business activities you are going to transform this 6 capital from input to outcome. So remember business model, how again this is little bit of integrated reporting framework, right? How does it work, right? It works with the input being 6 capital, right? So input capital. Then in the business model, what happens is through the business activities in Dialogue, the business activities you can see, right? So that is here based on different industries they are into, how they are creating, and I'll explain specifically telco model in a little detail in later, right? So through the business activities, what you are doing is you are creating an output, and that output is going to generate outcome, and that outcome is going to increase your same 6 capital, right? So that is this capital, the financial capital, manufactured, human, intellectual, social, and natural capital, right? From a risk perspective, what are your focus area, right? The financial capital, obviously. And then natural capital, this is where the S1 and S2 standard comes in. Even other areas are important. Now this is for you to understand why I am showing this structure, non-financial reporting. Do you have an understanding? Go to those LOs and ask if you want to structure integrated reporting, right? If examiner asks you to explain the integrated, how multi-capital model is helping to generate value, do you have that knowledge? And then how do you, is it required to use all of these standards, because they are using the same company. In another slide I'll show you. Now this is what, for example, Dialog has done. Now they have a stakeholder framework, which is GRI. This is all in the syllabus, by the way, stakeholder framework, right? So remember, stakeholder oriented framework means you are looking what materiality? Impact materiality. So very, very important word. Please write impact materiality. What is going to impact my stakeholders? Impact materiality. Then if you look at IFRS or SLFRS sustainability, and so that sustainability standard is connected to SASB, right? SASB standards connected to IFRS S1 and S2. Now these are based on financial materiality, right? Financial materiality. So impact and financial materiality. And then for Dialog, being a telco company, there is another standard which is GSMA. So finally, all of this, if you look at these topics, are very relevant from a risk perspective. That's why this list becomes important. What are the areas you should focus as a business, right? Look at some of the items that take your attention, right? For example, cyber security and data privacy. Now, if you have been asked to do a risk from a CFO's perspective, what could affect potentially your financial statements and the systems? Imagine if there is a cyber attack to one of the network, the billing system, everything goes for a 6, your billings is going to be inaccurate, the data lost, right? Data leakage, the risk is very high. I will show you how they have rated this risk and how are you going to prevent. And if you look at your corporate governance code and go through cyber security as a hot topic, and I have slides in this deck to show the importance, right? And data privacy, I told you why it is important. Then why procurement is so important? From a risk management perspective, there are restrictions, especially in IT services. You can't just get the services from, there are certain countries you are prohibited to take services, right? So those issues are discussed even in their reports, and they are in the industry, right? And then what are the other topics that takes your attention? Anything else? Now this one, from a governance risk perspective, right? Technology disruption, extremely important. Please make a note. Now, if examiner asks you risk of misstatement, what is the number one risk that you will write? We already discussed, that is revenue recognition. What is the risk? Inherent risk is there. The possibility that there is a revenue leakage, and why there is a leakage you can explain. For that, what are the internal controls you are recommending from you looking at COSO perspective, right? Obviously, this company's control environment seems good, but how about control activities? How the duties are segregated, the control activities, information system, application and general control, how that connects? Those answers you need to write, and right now, right? So that is your second risk. Okay, this is revenue recognition. What is the second top risk that you may write? That is impairment of non-current asset. Why? Because the technology inherent risk is very high. I will show you in the annual report the technology changes, right? 5G, and now they are talking about cables under the sea. When they bring these new technologies, how that is going to impair the existing technology, and that becomes a significant risk, like the CAM that we discussed. So that's the second big thing, impairment, right, of non-current asset. So likewise, we can go and add in few risks. And then I told you even the laws and regulation, more specific, cyber risk, sorry, third one may be cyber risk. So this is from a risk. But the important thing is, මේ list එකක් හදන එක නෙවෙයි. How do you describe this in your own words? And can you propose some internal controls or evaluate internal controls, right? And that is what is important. And anything else that takes your attention from this slide? Others are largely business risk, right? So non-discrimination, all of that. The third thing is, if you look at from IFRS S1 and S2 perspective, this climate risk is very important, how they are going to quantify scope 1, 2, 3 emission, which is a complex area, right? And so this is how that is presented. And see, they are using SLFRS S1, and the GRI universal standard has a topic. GRI universal standard has material topic, and these are the topics that they have selected from their, remember this word, materiality assessment, and that is impact materiality. So how do you do that chart is to do like this. So they look at the topics which are relevant to the organization, right, and the external parties, the stakeholders, and then what are those impact topics are mentioned here. You can see what we discuss: cyber security, data privacy, right, and corporate governance topics we discuss, and climate change likewise. So that is an area that require attention. And then little bit of risk management. And here my point is, remember, this is very, very important. Again, make a third note in this lecture. There is a new LO added to your syllabus where you are able to recommend to the board the how to structure risk and control related responsibility. For example, even in your new study guide, additional supplement, which is there in the website, talks about 3 lines model. So how do you align these models, right? Those are advanced questions that if examiner wants can be tested, right? But I want to show you in practice how that works. So especially this slide is dedicated, right, how risk management marry sustainability, right? In risk management we talk about, even in CFO's risk of material misstatement, and now IFRS S1 talks about SRRO, right, and S2 talks about CRRO. And what are the 2 CRROs, right? Physical risks, right? Now sea level rise, how that is going to impact in the short run to long run. And then you see the sudden weather, if there is a disruption to one of their network which is on the top of a mountain. Now those are physical risks, and the other one is transition risk, right? So transition risk can be I have done a separate lecture on this. That is available, please look at it. Very interesting how. So now as a board of directors, from a corporate governance perspective, right, now I am connecting this to corporate governance, right, while you are looking risks to financial, the credit risk, market risk, are you also looking risks in terms of climate, right, in terms of social topics, right? That is where the SRRO and CRRO come. Remember, in the first year, the transition relief given is to talk only CRRO, right? So from that perspective, how are you going to identify your physical risk, right? The possibility, like I said, that due to a weather event, that your network is going to be impacted. So how are you going to operate? And that, is it connected to normal risk management? Now see how Dialogue has done that. They say, there is a board risk committee, right? They call BRCC, board risk committee. They have a primary responsibility to decide. Now this slide specifically they talk this year what they have done, CRRO. They monitor CRRO as well and report on a quarterly basis, right? The identified CRRO, right, is being analyzed to see how it is going to impact their strategy. And especially the board of directors look at this risk when they look at the strategy. For example, long run, how are they going to deal with some of those high risks, for example, locations where their network towers are based, and then long run, how they are going to meet SBTI or the net zero target, where they are going to be, say, net zero. The idea of net zero is to really look at your overall exposure, the emission, and then maybe through solar or buying, how are you going to minimize to a zero level by 2050? And that is where the S2 standard specifically comes, right, using greenhouse gas protocol accounting standard. How are you going to account for carbon inventory? So which is your scope 1, scope 2, 3. So remember, this is not a lecture to talk about this, and I recommend you to watch my 1-hour video explaining maybe more than 1 hour this process. So understand, so there are a lot of emphasis on risk, climate related risk, so you need to definitely look at it, right? And then before I'm going to financial statements, before do that I'm still in risk management section, and this question is the previous point: how do you structure risk and control responsibility? If the examiner asks a question like that, say as a CFO your advice in whether these reviews, who is supposed to look at what? If you look at revenue leakage, who should look at it? Climate risk, who should look at it? Is it a engineer at a location, or is it from the head office risk officer, or is it the internal auditor? How do you structure? Now this is how Dialogue has done. For example, now you can see this is internal auditor's role. When your case study has an internal auditor, this is employee's role. In addition, they have a risk champion, right? And then there is a risk owner as well as a co-owner. So the risk owner is who is the front line doing the business, right? So on a going basis, the risk owner has to identify, assess the risk, right? Identify mitigation plan, all of that. And then there is a person who is supported, and that is a co-owner, providing support to the risk owner on the key risk identified. So this is a support function. And then risk champion is a SPOC, right? Single point of contact to coordinate everything and maybe risk reporting. And then, so overall employees, they have to drive a risk culture, and the internal auditor has to, as an independent function, help the board to ensure that the risk management works, right? And even the internal control environment is stronger, and then provide that opinion, right, to the board. So this is very, very important. And this is the 3 lines model. And I think, yeah, this is mentioned in somewhere as the 3 lines, right? Now if you look at from a lines perspective, this is the first line, right? And these probably the areas like this, the second line, and then this becomes the third line. So there is one more slide I am sure explaining this. And because we are talking about risk management, this is for you to be aware. Again, I put this heading CFO's perspective. Why CFO? That is why this change was brought into your syllabus about 2 years ago, but examiner is slowly getting there, right? But now no need to be slow. There are only 2 more papers to go. So what I was explaining to you so far is about how to structure risk and control responsibility using 3 lines model, and now I am coming from risk management to financial statement risk. That's the critical part for the exam, right? So I already explained to you through the materiality framework the risk that matters. Now look at this risk heat map, right? So these are these extract from Dialogue, right? And I told you that most of the facts connect to the Dialogue case study, right? Now, specifically the top rated risk, this is a risk heat map where you rate the impact and likelihood of the risk. So look at risk number 8, which is a very high risk, right? And that is cyber risk. So that's where from corporate governance code perspective also cyber risk matters a lot. Read about it. So what I am suggesting, if I give you an exercise, please write down. This is a learning outcome that has a higher chance of testing, right? If it doesn't come, don't blame me, right? So my job is not to predict, but to equip you with whatever question that comes in. You are mature enough to write the answer, and you have the knowledge. If you don't have the knowledge, now you have time to navigate into those highly examinable areas. So the question to you, from a CFO's perspective, looking at the risk grid, look at now, if you go back to few years ago when CA issued the pilot paper with the syllabus change, actually this type of things given, business risk. And as a CFO, how some of these business risk is, if you give this information and you have been asked to explain the impact of the business risk on the financial statement, right? From the perspective of inherent risk and control risk. Inherent risk is very clearly what is given in the case study for revenue recognition in terms of complexity, right? The IT system and large volume, etc. And then the control risk is where you have information to show that some of those controls may not work, and together these two means risk of misstatement, which is a bigger part of your syllabus topic. The chapter True and Fair View talks about it, and totally from a risk language, not from audit language, right? So now by looking at this risk, how are you going to explain? My question to you, evaluate the impact of the business risk on financial statement, either at assertion level. When I say revenue leakage, remember it's completeness of revenue, right? And then if there is a data missing, some data not being inaccurately taken, or incorrect rate being applied, that is accuracy. Completeness, accuracy, those are called assertions. Very, very important. And hint examine is given with this CAM is to look at that aspect as a risk. So now, my question, are you clear? Evaluate the business risk, right? Evaluate the impact of business risk on financial statement, both at assertion level and overall financial statement level. Now, cyber risk you might explain even as overall risk. If there is a severe attack that your systems are down and you cannot run your revenue reports, you can't generate accurate financials, right? Say the worst case. And then technology risk, how it is going to connect your impairment and how do you write that answer? හරිම ලේසි මේ ටොපික් එක කියවන එක. You get stuck when it comes to writing answer. Exam is all about writing, given the limited time. That's where you need to master. So the question I will give you in this lecture for the next half an hour, several questions which you can write answer. So this is very important from that. This is a top rated risk, risk number 8. And then obviously 432 also rated, fairly higher rating. If I count the rating on a scale of 1, 2, 3, 4, 5, this 5 into 4, this risk rating is 20. That's how you read it. And this bucket is 1, 2, 3, 4, and then 4 into 3, 12 bucketed risk. Risk number 2, 3, 4. So what are those? Geopolitical risks, legal and regulatory. I told you this is also can impact financial statement, legal and regulatory risk, and obviously market risk, right? And the ESG risk is IFRS S1 and S2, which we spoke about. And that again connects to financial statement in terms of sustainability. That's where the risk management, the risk perspective comes to financial statement. So as a future CFOs, your ability is not just to talk the numbers, report the risk behind those numbers and how those risk is going to transform or change the numbers in future, right? So risk is to look at the future. And understanding current risk of misses statement also matters. Now I am navigating that further down, right? Now if you look at in this annual report, when you go to page number 114, they articulate that how some of this legal and regulatory risk will impact them. As a technology company, they get the service from some of the foreign vendors. And if those vendors operate in a sanctions countries, you know, there are some countries, there is a sanction list. And if you know this, you can't get any service from this. And then when you have a foreign client providing that service, or by law, you know, you have to incur those penalties or you might lose the business and so on. So that supply chain perspective, how that comes. And then cyber security, specifically this year they have indicated increased sophistication of cyber attack, because now cyber terrorists, they also know the countermeasures companies are taking, therefore their attacks are unpredictable and not just normal phishing attacks, various cyber attacks. So your risk mitigation also should be advanced, right? Like SASE, new technology to counter cyber risk. And then technology risk is very, very important for financial statement. This is impairment. And how do you write that answer now? And specifically, see, this year they have done submarine and cable, increased redundancy, therefore how it is impacting financial statement. So that's what I want to show. And then sustainability I already covered. Specifically, remember I explained to you what is board of directors responsibility on the SRRO, specifically CRRO, right? So therefore in this lecture I am not going to now spend long time. I recommend you simply watch full session I have done on this. If you watch that video, then we don't need to waste this time to go through sustainability related things in detail. So I skip that. And then what I want to emphasize, let's navigate the risk in detail. Right, risk part. Now this is very, very important, examinable. Now what are the risks with this Jan 23 curricular revision that you have been asked to look at as a CFO? This is from your syllabus. How do you understand using this inherent and control concept in telco, your risk level, risk of misstatement level, right? And how that is going to impact assertions. right? Specifically, how do you apply that to accounting standard when it comes to revenue recognition, right? Even impairment, goodwill impairment. Goodwill is another hot topic, we will discuss why. And then this is the question I asked you, by looking at company's risk grid, how do you convert this into risk of missed statement, either at assertion level? This is what I asked you to do, using what? Using tool like internal control framework, fraud risk indicators, right? The risk assessment part of the internal control framework. If you look at the CASO part, now what does this mean in the CASO framework, right? You have these business objectives, right? So you have financial objective, operational objective, and the compliance. And CASO begins with internal environment. That's your corporate governance, the board of directors, how they oversee financial statement, the code of ethics, etc. And then the second aspect of CASO is to look at the risk, and that is the risk grid I showed you earlier, right? I showed you the 5 by 5 risk matrix in a previous slide. If I go back, this is the risk. I had to go far back, right? Now this one. So in the course of, this is your risk assessment, how you're looking at business risk. And then when it comes to financial statement, how you basically convert this into a risk of misstatement, right? So that is this. What is the impact on financial statement, right? Using assertions, cap cover, the completeness, accuracy, presentation, classification, occurrence, valuation. So say PPE valuation, that's your impairment, right? The debtor's existence, your billing, right? As a result, whether these post-paid balances are actually there, the fraud risk is very high. Again, the possibility in telco for fraud risk, another interesting area, right? Then, now this is extremely important, right? Revenue recognition in telco. This is extremely important slide which you need to really deep dive. Now, the examiner දීලා තියෙන එක අපි කතා කරා. Camp එකක් දීලා තියෙනවා, right? So what examiner has said, there is a complexity, large volume of data, the billing system has to apply, all that is given. If you look at from a control perspective, right, I am explaining this to you. One is accounting standard, right? You need to apply 5-step process. You identify, this diagram is blurred. Identify the contract, you know this, right? The identify the performance obligation, what is the PO, and then what is the transaction price, allocate and recognize revenue. As you know, in telco you come across, right? Even now see this bundle, you are selling a connection and that router and then connection charges and then the actual call charges. Do you want to separate it or you are going to recognize in one bundle? So that complexity arises, and then at which point revenue is recognized when a call is made and how that is captured through the switch, right? Switch is a very raw data. I have a document I'll share with you explaining in one page this diagram. Very important to understand. This complexity means you calculate, you get the raw data in terms of minutes and which is transferred properly, captured properly to a caller detail report, right? And then imagine the minutes captured here, if it is not moving through this, there is a minute lost, and that is where in most telco, you can Google now, they recruit revenue assurance accountants, right? They specifically looking into these processes to minimize revenue loss. So if you examine us, what are the key controls that need to be there? Specifically, the reconciliation process in revenue is very important. How revenue is recognized, right, from switch to this, and then billing system and to your accounting system. And the additional complication arises, how do you apply the correct tariff, because there are different packages. So now, from a CASO framework perspective, like I explained to you earlier, right, you begin with control environment, that is your corporate governance practices where the audit committee, risk committee oversee, and there is a code of conduct, the authorization, the responsibilities are identified. Then you do the risk assessment and identify revenue leakage as a high risk. When you do that, what are your control activities, right? What are the control you are going to recommend? And that is where you need to look at your even IT controls, right? So specifically application controls, in addition, basic controls are segregation of duty, authorization, all of that there. So what are the IT application control and ITGC, and how this information is captured to information systems and how it is getting connected to the GL. So if examiner talks about applying the CASriLanka framework specifically because there are multiple systems, there the emphasis on ITGC, IT general control and IT application control, right? For example, there is no one who can edit these tariff rates, right? So those fundamental controls becomes critical for revenue assurance perspective. Why? If you write the answer, because of the complexity involved in multiple systems, the large volume of data that is being processed, and the inherent possibility where revenue can leak because it has to pass through multiple layers. So that is a very big point, right? And so I'll share you a small summary explaining this. And this is then accounting standard. At the same time, remember, significant risk is where you may have to exercise significant judgment in your revenue recognition process. Now, this disclosures from dialogue. You look at how their revenue recognition policies. See the bundle packages which I mentioned to you earlier. If a good or service separately identifiable from other items, it is called bundle package, right? Now that is a decision, separately identifiable, right, or not. So there is a bundle package. Now this is the policy, company recognize revenue from individual goods and services separately, right? Then consideration they split and allocate. Now they have given one example here. Now this part, if you take postpaid, if it is a postpaid company, now see this one, right? The standalone selling price are determined based on the list prices, right? And the company sell mobile device and network services separately, right? Because these are separately identifiable contract. If it is a postpaid contract, right, that involve handsets are evaluated. If there is a hand, it is evaluated to determine if they contain a significant financing component, right? Now see, that's very important, because if there is a significant financing component, you have to separate. For the contracts where the timing difference between customer payment and transfer of goods is expected to be 1 year or less, the group has elected to apply practical. That means you don't adjust, right? If it is so, likewise. So you need to go through from accounting standard perspective. This bundling and unbundling is a very important area. And look at the pay TV and fixed broadband revenue recognition policy, right? Each subscription to a contract for pay TV, right, and fixed broadband service is considered as a series of distinct services. And this is the argument. This is a distinct services as per the standard. Substantially the same. Distinct means is same in terms of the pattern, everything, with other contract, right? Then they provide set of boxes, routers and connection fee. Now this is where theoretically you can argue, look here, connection is separated, right? These routers separated, all separated, right? But they say this is exclusively for these services, because without that you can't perform. Therefore this is distinct and they are not combined. This part is now what they say here, and connection fee for the exclusive use of group services do not represent distinct services so good, and they are not to be combined with the subscription services as a single performance, right? So now this is a clear area of application where they separate subscription services with the rest and accordingly recognize revenue. So what is the message to you? Little bit of master your revenue recognition standard. One is from accounting standard perspective, you may be advised the board on some of the significant judgment. From audit committee perspective, if there is a question that what are the areas that audit committee should look at, when they review financial statement, you can easily propose revenue recognition, fraud risk that could arise due to fraud risk factors, again from the complexity and the need to review IT controls, etc. Right? So, and this is very, very important slide for you to understand practically in more detail how this CAM is dealt by auditor, which is actually there in dialogue report. Right, now they explain this. See the assertions, revenue recognition, accuracy of mobile services, right? Why it is accuracy? Complexity, the same thing examine as complexity of the system and inherent, see this word inherent risk, that is the inherent risk that I explained to you, and that is connected to accounting policy. You can go through that. And then this is the amount of mobile revenue. Specifically, why this is risk, which is very important, due to A, multiple elements. Now this is very good for you to write the answer. This is how you explain the risk. Multiple elements inherent into the revenue. There are multiple elements and there is an inherent risk around the accuracy of revenue. Why? Because of complexity and impact of changes in pricing model. You can see the same wording in your case study. This wording is there as it is. And then complexity of IT, that is also mentioned. A large volume, same wording is there in your case study, right? Now, it's not for us to match words, but from internal control perspective, right? Forget the auditor because this is not auditing paper. From an internal CFO's perspective, I told you the most important thing is IT system controls, the relevant controls, specifically IT, GC and application control, right? So access rights to these things like switching, billing system, the reconciliation process, right? Who authorized changes to rates? I told you that's very, very important to billing systems. Those are fundamental control and accuracy of calculation which is billed. Are they tracking any customer disputes? Those are practical control that can be brought in. Recalculation, all of that. This is the reconciliation that I mentioned. GL and IT system. You don't need to know all the technical terms. At least is there a reconciliation in these systems, right? Those are fundamental things that you can talk about. And most importantly, journal entries. Because if there is a revenue leakage or a reconciliation problem, they will pass a journal entry. It's extremely important from fraud risk perspective. These journal entries are reviewed by an independent party, right? The other area, in your case study, look at the financials given. There is a company column and a group column, no? Is there a goodwill? Can somebody tell me, is there a goodwill in your case study or not in the group accounts? Right now, not there, right? And if they are going to give you a scenario like actual case study, if you look at, there's a significant amalgamation, right, with the Airtel. And look at in this company, one of the bigger risks in actual case, which auditors also flag, impairment of goodwill. Specifically, you see this December 24 transactions, that is acquisition and merger of Airtel, right? And that, why this is identified as significant risk? Obviously because it's goodwill, and you need to fair value and do those adjustments, and most importantly, goodwill has to be tested for impairment, whether the indicators are there or not. So why this part really helps you to write that answer, because of the key assumption including discount rate, right, the growth rate, the EBITDA that is taken, right, based on this, there is a possibility for, remember this word, management bias. As a result, there is a possibility for overstatement. So what I want you to do is write one-page answer. Like I told you, what are the possible risk of misstatement from a CFO's perspective? Write that answer. Then for goodwill, revenue recognition, right? If there is a case study that there are going to be a goodwill, then you can talk about it, right? Then other risks like cyber, what we discussed, also you can cover. So that is, yeah, this is group level, and then this is the continuation of that goodwill, and that is, like I said, the fair value of assets and liabilities at that date, and judgment involved in determining the fair value. These are standard wording. When you write that type of answer, you can easily navigate. And I think this is, I already covered, remember, 3 lines model, right? This defense is not right. The correct model now is 3 lines model. So it's the first line. Who are the first line? See, I explained to you exactly the same way. The risk owners and co-owners are the first line, right? Then the second line is specifically entrusted by the board, management oversight, but who is doing that is not clearly given. That's usually the risk management division, and then third line is internal audit division. And now you can see how this, now if you are supposed to propose a structure, right, if the question is about structure in risk and control, you can see there is a board committee, right, there is a audit committee here and a risk committee, and independently internal audit is here, and then group risk and compliance division provide assurance, right, to these committees and how it is going from the chief of risk to the above, right, and covering these areas. So that's again important. See the heading, structuring risk and control using which model? 3 lines model. That's a very important application. And then another exam question which I want you to think, please write this as well, right, that is, how do you apply the course of framework to this case study? And there are about 2 or 3 past paper questions, right, on this. And similarly, if examiner connect this to course of framework, how are you going to answer that? Right now, remember I discussed with you many times in the course of framework, this part is pretty much corporate governance, right? So that is where you talk about independent board oversight. This is 17 course of principles, right? And I spoke about companies ethics, structures like we discussed using 3 lines model, and then people and accountability for controls. Then the risk part is really in your syllabus, right? This is where you identify business risk and then how you see connect it to financial statement. Remember, this also include fraud risk, right? And then the most important other part which examiner can test is about the IT general control and IT application controls, whether those are adequate. And then the last bit, this is about your ERP system, how, for example, the billing system and ERP system is connected, and how journal entries are passed. Specifically, journal entries are very important at this stage. And finally, how your audit, the internal auditors work, who is actually checking company's control. Is it happening every month, or is it a separate exercise, and how internal control weaknesses is it communicated to audit committee? This is course of framework in 5 minutes, but in a more practical and a pragmatic sense. And the 3 lines model is also there in your supplement syllabus, which is in the, so that is that. And this question you can prepare and practically write the answer. The other thing is, how do you evaluate the risk management role of the board? So remember, in the listing rule also, now they talk about risk management principle in new corporate governance code. So specifically, please go through new corporate governance code, and I'm going to do another session, students, because one student has messaged me, so you said you will do the focus session on the changes to corporate governance code and listing rule. I haven't forgotten. Obviously, I could not do many sessions as I planned. However, right, when the time comes, I am really with you to support. Now what I do is I will put some specific questions for you to answer, and in that discussion I'll draw specific attention to the recent changes to corporate governance code and listing rules, right? So, but even in this one, so now, because I don't want you to waste, I told you every minute counts. After this lecture, you need to navigate these areas in your open books and be prepared. So you open your corporate governance book and see this new provision added, that now there is a risk management responsibility to have a risk policy, right? And I explained to you risk framework, how the risk principles, the risk heat map, how the structure works, right? Whether it's a separate committee or entire board, you are better able to answer. The risk committee, who should be there, right? 3 members, majority should be non-executive. And listing rule says where the listed entities do not maintain separate committee, audit committee can undertake, right? Right. So if there is no risk committee, audit committee should take that role. So these areas you need to really go through. And then I am asking you additional question. Please write this also. Explain the oversight role of the board on cyber security. So these are the future questions which I don't want to discuss now, and prepare for those questions. Then what more? And how do you answer these additional questions? from corporate guy, I told you whether it is there in the exam or not. This is about 40+% of your syllabus which I talk now, which some of you ignore. මේක නම් මොන හරි කරගන්න පුළුවන් කියලා අතහැරලා you are spending all of your time to do only calculations, working everything. But remember, nowadays questions are more, you are at this level synthesizing, interpreting, right? That's where some students says this is very difficult now. So now you need to think that there is 40% here which you can easily add to your other financial report and easily get through this paper. Don't forget this area. And then while you work on this area, automatically accounting standard can be connected, especially from risk of missed statement perspective. Then the corporate governance, ethics, every year there is easy 5 marks question. Look at the past paper, very easy to approach. Sustainability, you will expect something in this paper. So every marks count if you want to score above 50 students. Therefore, please prepare for this area. So additional question that I told you, some mellows that have not been tested. Evaluate the effectiveness of the board in discharging primary board responsibilities, right? And so on. So those additional questions I will cover as a part of my next lecture. So the next lecture is going to be few scenario questions, and now with the objective of this lecture, if I summarize, is to I showed you 2 pages which really summarizes the key points in the case study. And in summary, from a governance perspective, this case study seems to have a very sophisticated governance model like the dialogue, right? Seems to have, so there may be additional information coming through, but the examiner is more drawing attention to some of the significant risks that could impact financial statements by giving those scams which really require you to think how those risk aspects connect to financial statement and how internal control framework connects there, and then IFRS sustainability integrated reporting, those principal questions may be tested. So this is the summary in 1 minute. So if you have any questions, please ask, otherwise I will wrap up the session now. And I hope this was useful, and I hope you will, I will also share some of this material, even there is one slide that I have done on the controls, and then what are the other most relevant topics, we will try to develop answers. So what I do is probably I'll put some of those questions, possible questions, so that you should now spend time. So my advice to you, there's very limited time for the exam now. So therefore, every minute counts. Remember, in a day, you have very limited time to work. Find out what is your prime time, maybe half an hour. That half an hour, I recommend you to read a question and try to write your answer. This is how I write the answer. And also, by answering past 1 or 2 papers, you see some of the area you haven't touched. You are fully outdated. Make sure those critical notes you go through, think like examiner and look at the learning outcome. This learning outcome, if it comes, I have no idea, which means you are at risk. So with that message, I will conclude today's session. Thank you very much.